Hey everyone, this is Heather here, and today this is going to be the first video in our new weekly series called Bullseye Recap. So this was suggested by one of our Twitter followers where they wanted us to go through some bullseye plays every weekend and see how we could have gotten in on them, how we could have profited from them, and then also go through some of the losses from the tools as well to see how we could have prevented those. So I thought that it was a great idea, and we are going to start doing that today. So today in this video we are going to go over a few huge winners from last week. So we had some exceptional winners last week going over 2000% profits per signal, and then we are also going to look at some losers just to see how to prevent losing on certain positions. So let's start. So for those of you who are not familiar with the tool, I'll just give a 60-second introduction. So Bullseye is an artificial intelligence based tool that looks at the live options flow, analyzes the data, extracts patterns from hundreds or thousands of data points, and then tries to predict whether a contract is going to go up in value or down. So for each contract, if it thinks that the contract is going to go up or down with a certain confidence, then it posts a trade idea on this Bullseye tool, and then that idea is valid for about 1 or 2 or about 3 days, and then that's the time that we want to get in on that idea, and then we can profit out of that. So let's start looking at some signals from last week to see how we could have found some really beautiful gems from here. So the first thing that we are going to do is we are going to filter out everything that doesn't have any profits right now, profits or losses, so non-zero profits or losses. That just means that these alerts were posted, let's say, on Friday. Today is Saturday night, so those alerts were posted on Friday, and they don't have many updates right now. And then what we are going to do is, since this is a signal that I use, we are only going to look at the high confidence signals. So the reason I do that is many people complain that the tool posts about 30 to 40 signals a day. How do we filter out the best quality signals? And since this is an AI tool and it has a certain confidence with each signal, this is the filter that I suggest everyone to use. You can also not use this filter if you are comfortable using the tool and if you're comfortable doing your own DD, but if you're totally new, then this is a really great filter. So we're going to look at some signals now. So let's go down and let's see what were some of the biggest winners and losers. So we can see that we have an Apple put buy that's up about 67% right now. This was the expiry was May 21st, so this has already expired. But I want to look for something that actually went up more than 100%. So this is the first alert. So we can see that Boeing on May 20th was suggested by this tool. The confidence was 64%, so anything above 60 is good. And this was a May 21 expiration. The stock was 225 at that time, and the strike that was suggested by the AI tool was 230. And up till this point, by May 21st, today is May 23rd, the contract has already expired, but I believe it expired in the money. So let's take a look at this contract, and let's sort of look at how we could have analyzed Boeing's price action to see if we should have gone into this alert or when we should have gone into this alert. So I have the price action dashboard open, and you can see that we actually the stock was at 225, the strike was 230. We actually closed above the strike, which is why that contract just went mad. So looking at the daily, we can see that we have a resistance level at about 240. All right, that's good. And let's just draw the remaining lines using our algorithm, and we can see that we had a support level at 224. So let me try to make it clear. All right, so the last price is 234. We can see that just using this algorithm, the stock price was at 225. Just using this algorithm, we can see that there is a support line right at this 224 level. So that's our first signal. We always want to trade on support and resistance lines, and we haven't even dived into the 15-minute or intraday chart right now. Just looking at the daily, we can tell that we are right at that point when the signal was given on 20th May. We were at a support level, and that's a perfect entry. Whenever we are on a support, we want to buy. When we are on a resistance, we want to sell. And so without even looking further, you could have entered in that signal, and it would have again worked, and you would have 700% profits probably. But most people actually don't keep their contracts till 700 profits, so let's just assume that you would have at least 100% profits, which are still pretty good. Now let's take a look at the intraday chart and see if we could have found anything there. So I'm going to open up the 15-minute chart, and this signal came at 11:12, So let's see, where was that? All right, somewhere around here. You can see that this is the support level, and we can see that this is a resistance level. So this was a support level. This was actually broken this day. Look at where it was broken. So always work with these levels. It makes your trading very easy. So you can see this was a support. This actually got broken. Then it became a resistance. The next day we just gapped up. Then it became a support again. And then the next day we just gapped down. And we tried to, right at the open, we tried to cross this level, but we could not. And so we have this level here, right? And we can see that here, May 19th, so the signal was just not there. Around here was the time when the signal came. And the next resistance level was around here, right? You can see 1, 2, 3. So around here. So when the signal came in around here, this was already a pretty decent entry, because there is no resistance level above for at least $2 or $3. And so we can expect a, let's say, $2 or $3 move. What we would have liked would be for this price to actually be right here, like right somewhere around here, right at the support level, because that just provides us more confidence. And then we just ride the stock until it touches the resistance level, which is actually here. So the next day you open, again, look at, we have a resistance line, we open above it. Look at the first candle, we try to go below it, we cannot. Then again, in like the fifth candle, we try to go below it, we cannot. And then the entire day we just kept up, we just kept going up after that. And so we ended at 235, let's say. But from about, let's say, 225 to 235, since this was a short-term contract, this would have netted you about 700% profits. Now I'd like to add that we don't recommend going into these 2 to 3 days till expiration contracts. We always recommend that you add at least 2 or 3 weeks, maybe a month in your contracts, so that you are safe and your contracts don't have a lot of volatility. So if you had done that, then you would probably have again about 100% profits, because this was a $10 move in just 1 or 2 days. So that's where the power of AI comes in. This was sort of a really good example. We had good entries on the daily chart, then good entries on the 15-minute chart, and then yeah, everything else was good. All right, let's take a look at something else. But we had GME, it didn't work well, it didn't work bad. We had BABA as well. So again, more than 100% profits, a short-term contract. Let's see what happened. We were at 214, and the stock was at 214 on 20th May, and the strike was 217. So let's look at BABA. All right, so two things here. Just looking at it, I can see that this is a support level, right? If I zoom out, you will actually be able to see that this is indeed a support level. Let's actually see if the algorithm draws it as well. I am not sure. Okay, all right, this is perfect. So when you open the chart and you just click on these SI lines, the algorithm always draws the support line, and the support line is at 212. The price was at 214. So again, very similar to buying. The support was right below the current price when this signal came in. So that's your first factor that you're going to keep in your mind, because that's a positive factor, and that tells you that maybe you can enter into this alert. But again, you want to add some more time here. So that's the first signal, and let's zoom in. This is 19. So you can see that on May 20th, this signal came in like 13 minutes into market open. Yeah, 23 minutes into market open, and you can see that on May 20th we actually rallied quite well. And let me try to zoom in. So look at where we opened on May 20th. We opened right above the previous resistance level. So this was a resistance here, we couldn't cross it, but the next day we opened right above it, and that's your entry right away. You don't even have to wait. But still, let's look at the 15-minute chart, because we always want to make sure that we're doing things in a disciplined way. We're not just randomly going into these signals. So this is where the signal came in, and you can see that this, let me draw this support level for you. You can see that this had been acting as a pretty good support level for about 2 to 3 days. So this is May 17th, this is May 20th actually, and you can see that for 3 to 4 days we could not break this level. So this is an intraday support level, and then the signal came in on this nice, we had 2 nice green candles, and the signal came in around, not here, sorry. So the signal came in around here. So we had a few nice green candles, and that's when the signal came. Now you wouldn't enter right away. On the daily it looked like you would, but when you have this 15-minute chart open, you'd actually realize that we have this resistance level, and so you won't enter here, right? What you're going to do is you're going to enter when we close above this. So this candle at about 10, the signal came in at 9:53. That very candle closed above the resistance level. So maybe you don't even enter here, you enter somewhere midway in this candle at 10:15, and you can see that we have just broken a resistance. And you can see again the volume was low here, so this was not a good breakout. But the very next candle we have some high volume again, so that just tells you that this is a decent, not the best, but this is a decent breakout in the intraday chart that you're going to enter, and you'll just ride it all the way. So always take your partial profits when you have, let's say, 50-100% profits, because you can see the next day it actually went down and it crossed this resistance level again. So let's say you still had the contract next day, you'd probably exit as soon as we cross this newly formed support level. But yeah, again, we had a good entry on the daily chart. Then on the 15-minute chart, you can see that we had a good base or a good support below the price. But when the signal came in, we immediately had a small breakout. We entered right away on that breakout. So again, two signals, really decent price action, and we have confidence factors that help us find a decent entry on the chart. So that's two. Let's find something else. We have this TGT. I want to find a put alert, so let's see if we have any. TGT, no. NVDA. So NVDA went up about 2000%. Some contracts went up about 2000% last week. So let me see if we can find anything else. Otherwise, we'll talk about NVIDIA. Alright, so we have this one again. This is a call buy. So this is an NVIDIA. So this came in on May 19th. This had a really high confidence. You can see confidence is actually much higher than all of these other confidence scores. And this is the one that we're going to analyze now. So again, short-term contract. I think this actually went from 0.94 to actually $18 a contract, which is just huge. And the stock price was 546. It ended up on, I believe, 600 on Friday afternoon. So that's just crazy. We had a 60, let's say $50 to $60 increase in the stock price. Again, the confidence was the highest, and so you have to note that. And if you look at some of the other signals from some prior days, you'll see that the confidence for NVIDIA signals was gradually increasing because the tool or the AI was getting more confident in the signal. So we have this, let's say 72% confidence. We have 546 stock, and the strike price is 580. And again, short-term contract, so you won't actually go into this very contract. You always want to add some more time. Now, many people ask, why does the AI give these signals or these short-term contracts when you suggest that we go sort of in slightly longer-term contracts? That's because it's an artificial intelligence engine, and it always wants to maximize its profits. And the way you maximize your profits and actually your losses as well is if you do these weekly contracts, because they are really volatile. They give you high profits, but they also give you large losses. So please keep that in mind. If you have money to, let's say, play with, then sure, buy these weekly contracts, but please always do good risk management. So let's take a look at this one. This came in right early in the morning on 19th May. Alright, looking at the chart, let's just draw the levels. Alright, so we had a 533. The signal came at 546. So if it had come on 536, then that would have been sort of just awesome. And then you can see that the algorithm did not draw this line, but we had this resistance here as well. You can see we touched it, 1, 2, we crossed it, and then we have one resistance here. So let's see. On the daily, we can see that on 19th, we were still above the support. So if you have a slightly longer term contract, then you don't even need to worry about this small gap, because you know that we are on a support level, and maybe the support recently has been this. You can see the recent candle. You always want to look at the recent support levels. Maybe the algorithm was slightly off, let's say, and this was the level that we were recently respecting. We'll actually hopefully see that in the 15-minute chart. So you can see that we have a support, we dipped, and then we started to go up. We dipped again, and we formed this support, and now we're starting to go up again. So that's that. But you can see that we have this anchored VWAP support, which we actually broke. So that's not a good sign. So you always want to consider that now this anchored VWAP support might act as a resistance. Many times it doesn't, but please keep that in mind. So let's start looking at the 15-minute chart. All right. Okay, so this is beautiful. So you can see this was the support being formed. Beautiful support. This was a double bottom. We hit it once, we went up. This was a resistance, right? So let's just draw both the support and resistance levels. Again, this was actually a pretty good resistance. You can see, right? 1, 2, 3, 4, 5. So we hit this level 5 times about. All right, so this came in at right here, May 19th, 9:45. So this came in right here. We can see that we had a red candle, and in the very next candle we fell right on that support level again. So right, this candle would have been your entry. So there is sort of, we don't even need to look at any other entry because we are right on the support level. So whenever that's the case, you can enter, especially if it's a support level on an intraday chart. If it's also a support level on the daily chart, then you just have two factors going into your favor. But what you want to do is you want to find these support levels that can support the price, and sort of the price respects these support levels so that it doesn't go below it, and that's what you want. You want to manage your risk. If the price, let's say, goes below this level and breaks it, then you'll just exit your contract right away. You don't want to wait or hope in the stock market. You always want to have a process. So we can see that here, this was a resistance level. We just kept our contract all day and we enjoyed a really beautiful sort of 100 or 200% profits. And then the next day, look at what happened. The next day we opened the first candle. You would have probably sold. Let's say you sell your first contract, and let's say you bought 2 contracts, but you wouldn't sell your second contract. Because why? Because the very next candle we just broke out of this resistance. This was a really strong resistance, and we broke out of it like it was nothing. So that just signals bullish strength. And whenever you see these beautiful clean breakouts, then keep at least 1 or 2 contracts so that there may be additional profits that you might want to take. And so you can see that all day we kept going up. And then finally, the very next day, we again opened up. So this would have been the last resistance level. Let me straighten it out. So this would have been the last resistance level that we again broke out on the very first candle. We did break out to the downside. So if you still had a contract till this point, then you just exit, because now we have broken that level. But you can see we still went above. But you don't want to trade here, because now this is consolidation, and this is not something you want. You want smooth up and down trends. So this was actually, I had not analyzed this signal before this video. So this was actually a really easy one. You would have just gone. So it came here, and then it came the next day as well. So you could have easily gone into this signal here as well, and you would still have made about 200 or at least 300% profits, even on longer term contracts. If you had a weekly, then that would have been just sort of crazy, because you would have netted about 2,000 to 3,000% profits, which is just crazy to think about. All right, let's do one more, and then we'll do a few. We have SPY. SPY is always tricky, but let's still do, because people want to always go into these indices. So let's do SPY. We had a put for May 18. So we can see that there are no clear levels, but still let's try to draw one. So May 18. So this was the put. You can see we were still above a support. So on the daily, it looks like we shouldn't enter, or even if we enter, we need to be careful. We need to make it a short-term play instead of a longer-term play, because this is daily chart. But let's enter the 15-minute chart. All right, 18. Let's look at the time. And okay, so this actually came at the end of the day on 18. So let's see what happened. So any signal that comes at the end of the day is slightly tricky, because you don't know what's going to happen the next day. So please keep that in mind. But we're still going to analyze it and see if we could have done anything. 18. You can see that this came here, around here, right? So why would we enter this? Let's just draw the lines. All right, we would enter this because, again, the algorithm does a job for us. So you can see that this was a long-term, on the intraday chart, this was a long-term slightly decent level. Let's just, that we touched here, then here we couldn't break it. Then we went above it, broke out of here, then we couldn't break it to the downside, and then finally we had this huge red candle. So this is the candle. Let's look at the time again. 59. So 15. So 14, 59. All right. So this is good. We actually had an entry. So you can see that we broke this level, but we also had this tiny support level here as well, and that acted as a support, right? So we don't go away. We don't go enter into this signal right away. what you do is you wait, because you want these levels to break if you want to enter in the downward, or you want these levels to hold if you, let's say you wanted a call, you might want to enter here, but again we have a resistance, so we wouldn't enter it. So you always want these levels to clear out before you enter. So you can see the next level is here. So what you need to do is you wait. If you wait, you see that the price goes up, touches this resistance level, which previously was a support, now is a resistance, and then the very next candle, this candle, it actually closes below it. So this candle or this candle would be your put entry for SPY. And again, you can see the next day we actually started the day about at 407, and the last day ended at, let's say, 414. So our vendor sort of has these small gap ups and gap downs. I don't believe it incorporates after hours data, which is why you're seeing all these gaps. If it does, then the price action would actually be smooth, but the prices are again accurate. So if you entered here, then the next day you can see that we fell right on the support. So just exit right away, because there is a support level. We might just keep going up. So if you're here, you should be thinking that since this is a support level and it's a slightly longer term support level, we might, and see, and again another double bottom. We saw this with NVDA. So you must be thinking that it might just keep going up from here, so you need to just exit right away, or you want to wait till this level breaks or holds. And you can see that we did not hold this level at all, we just broke it right away. So either you exit here or you exit at one of these red candles, because there is a support below, and then that's it. That's your sort of entry and exit for SPY, and that would have again given you about 30 or 40% profits. So that's four different signals, 3 calls to 1 put, that performed pretty nicely in the last few days. And I just wanted to go over the price action and see how, when a signal comes, we can find the best possible entries and exits. The NVDA one was way too easy. I was not expecting that, but yeah, we had a double bottom. These are patterns that you can learn. Sometimes they work, sometimes they don't, but these support and resistance lines, you should understand that they work a lot more than many other technical analysis things and many other technical patterns, let's say. Alright, so what we are going to do is we are going to go over a few failures now, because again, this is an AI tool and it's not perfect. So the accuracy of the tool is not 100%. It's about 60% to 70%. On good days or on good weeks, it goes up to 90% or 80%. This week, I believe it was about 92% for the higher confidence signals, but it also drops to 60 or 70%. So you always want to sort of see how we can prevent from getting into losers. So let's do that now. So let's pick a big loser. All right, let's pick, and again, I'm not showing you cherry picked data here. So this is a live video. You can see that all of these signals, since they take a few days to pan out, and this was just May 20. So all of these signals panned so well on May 21st. And then even here, 322, 74, 322 again. So please give these signals time and don't enter in them right away, because that's just a recipe for disaster. If there is no setup on the price action, then you should not enter on the signal. But if you find a setup on the price action and you have these signals, then this is in front of you. The screen is in front of you. You can see how huge these winners are and how much you can potentially earn using these signals. So let's look at, again, we were going to look at a loss. I can't find 100% loss. I would like to find one, so let's do AAL. So, okay, let's do, yeah, the confidence was really high, so this is something that I'd sort of take a look at the price action to see if the setup is there, because I would want to enter since the confidence is high. So let's do this. We had a call buy. I'll skip this stock expectation for right now, for at least this video. We'll talk about it in some other video, but let's see how we could have prevented these 50% losses. The stock was at 22, the strike was 22.5, and this came in at 19. So this might have worked later on, but let's see. So the stock is still there. So this actually did not work. All right. Again, no lines close to the price. So this is where the signal came in. Let's open up the intraday chart. And let's draw our lines right away so we can see what is happening. Okay, all right. So this was a call alert, and let's see, when did it come? 15:44, May 19th. All right, around here. So this came around here, and you can see that we were right above the resistance level. So we had just, let's say, broken this resistance with actually some volume. So this was actually good. So this was a good signal. You would have entered, and yeah, so you would have entered into this contract and what would happen at the very next step is that this breakout, this tiny breakout with some high volume, would actually sort of fail the very next day. And when that happens, you can see that we have this resistance lines, we break it, look at the volume increases, but look at what happens the next day. We immediately break down from the newly formed support level, and now we just need to get out because the setup is not there. We broke out yesterday, it was looking good, we would have exited at around this level 23.57, but at the very start of the day it has broken out, and then that's your exit. So you just exit right away, you keep sort of whatever loss you have, and you just get out. And you can actually see that we could not break that resistance in the next 1.5 days. That level is still acting as a resistance level. So always respect the levels, always respect your stop loss, and just exit when there is a technical, let's say, level that gets broken that you thought would sort of hold, and that's why you entered. So this would have been a perfect exit right away. And this is also a point where we mentioned about keeping some time in the contract. So this was a May 21st contract, which is why the losses are about 50% right now. I believe they might be just 100% because the contract expired worthless. So what happened was, since you only had 2 days, you did not have enough room, and that's why you want to have at least 3 to 4 weeks in all your contracts so that the price can actually move. So let's say on Monday now we break out of here and actually go here. If you did not have any, let's say, time in your contract, then you would have again you had to exit here. But if you have some time and you think that this is still going to go up, then you wait for the next support level, which we never broke. We actually just started to go back up. So that just gives you some time for your contract to work. So always have some time in your contracts. That's a very safe option. When you have profits, you have huge profits, you still have huge profits, but when you have losses, your losses are small, and that's what we want. So let's do one more and then we'll finish this video. All right, let's find another. Okay, FUTU. Okay, so we have call buy, stock was 127, strike was 125. Stroke. Okay, so the stock actually dropped in price. So one thing that we can see, we have talked about these double bottoms. We have a double bottom here, so just keep a note of that when you're doing your price action analysis. Let's look at the 15-minute chart now. All right, this came in at 20, 10, 28. Around here, yes, at this candle. Let's draw the support and resistance line because I have no idea where they are at. So it seems like when the signal came right around here, we had just broken a support level. So this was a resistance, this was a resistance here, we finally broke it, but again this was a fake out. Look at what happened. We went above it, the very next 3 candles we went below it, and this is where the signal came in. So right when the signal came, there was no entry because we had just broken a support and we were going down. So let's say the short-term trend was down, and so you would not enter into this contract until there is a setup. When could there be a setup? There could be a setup. Let's say we go down, we touch this support level, and then we start going up again. That would have been a potential setup, but that never happened the entire 2 days, May 20 and May 21st, which is why the contract sort of just stayed at the same range from 127 here to 123. It did not move much. Another sort of entry would have been, so this is again a weaker level, but you can see that we broke it, then we tried to go below it, we couldn't, then again we tried to below it, we couldn't, we tried to below it, we couldn't. So this was again a decent support level. So you could have entered here, not here. This was not an entry at all. Like, I have to say it again, we just broke a support level. That is not a good bullish entry. You always want to enter on supports or enter on the break of resistance levels for bullish setups, and then you do the inverse for bearish setups. So this was not a good entry. If you would have entered somewhere around here, then you can see that we went from 123 to about 127 again. So you might had a chance to just get some quick profits out of this for a $4 move. And then you can see we started going down again. So this was just something where the stock market is hard, and you can't predict, or you can't do something about every single scenario that's out there. So you just want to sort of make sure that you are following some proper guidelines that are saving you from huge losses, that are giving you good entries, and that's it. So this was sort of it for this video. I really hope this is useful for you. If it's not, please let me know. If it is, please let me know as well. Please leave your feedback in the comments. We are going to do these videos every week and talk about some losers and some winners. There were way too many winners this week. I think average returns for all the signals this week were about 48%, which is a very good number for just 1 week. And again, I would love for everyone to use this tool, use our signals, couple them with price action, find support and resistance levels, and then just trade and get profitable. Thank you so much for watching this video. I'll see you guys around. Goodbye.